In this training video, we will explain the core components of the Teometric Demand Model version 3 and how to use it while trading. Our indicator combines tools such as Fibonacci levels, automatic fixed volume profile, buy-sell signals, market structure breaks, RSI divergences, and the Ichimoku Cloud to help you forecast price movements. Now, we will examine each component of the indicator step by step. Automatic Fibonacci levels. One of the most fundamental parts of the indicator is the automatic Fibonacci levels. With this feature, the indicator automatically identifies the highest and lowest points on the chart according to the selected timeframe and draws Fibonacci ratios between them. Depending on the trend direction, Fibonacci extension levels are also drawn, making it easier for you to see potential price targets. So, why are only some areas colored when all Fibonacci lines are visible? These are called special zones, and they act as strong support or resistance when the price reaches them. Golden zone, or gold-colored area. This is the area where the price is most observed and frequently reverses. The Fibonacci golden ratio of 61.8% has historically provided trend continuation or reversal signals with a 70% success rate. This is the most reliable area for buy-sell decisions. Underneath is the deep retracement zone, or red-colored area. This area indicates where the price has completed a deep retracement and may continue the uptrend by gaining support here. If the price drops below this zone and fails to surpass its upper boundary, it may move toward a lower Fibonacci level. While other Fibonacci lines provide only light support, this zone represents the strongest support level. Above is the full retracement zone, or blue-colored area. This is the area where the trend is considered complete and may serve as the most suitable resistance zone for taking a short position. If the price rises above this zone and uses it as support, it may move toward a higher Fibonacci level. While other lines provide only light resistance, this is the strongest resistance area. Automatic fixed volume profile. Next, let's move on to the volume profile. The fixed volume profile is automatically drawn from the automatic Fibonacci zone to the most recent price. Each time a new price candle forms, the volume is recalculated, and the POC, VAL, and VAH lines are redrawn. The POC is the price level with the highest trading volume. It acts like the heart of the market, continuously attracting price like a strong magnet. It serves as both a support and a resistance zone. Value area low represents the lower boundary of the value area, covering 70% of the volume. When the price reaches here, buyers usually step in, pushing the price upward. If the price falls 10% below this level, it indicates a very strong selling wave. Value area high, the upper boundary of the value area, indicating an expensive zone. When the price reaches here, sellers usually intervene, pushing the price downward. If the price rises 10% above this level, it indicates a very strong buying wave. How does the price move between these levels? Imagine a room. The POC is the center, while VAL and VAH are the walls. The price generally moves between VAL and VAH. It finds balance near the POC, touches VAL and rises thinking, cheap, let's buy here, touches VAH and falls thinking, expensive, let's sell here. Buy and sell signals. What to do when strong appears. Buy-sell signals detect market manipulations and provide you with buy or sell alerts accordingly. On daily and 4-hour timeframes, their success rate is 70 to 80%. If the signal shows strong or repeats in the same direction, the success rate rises to 83 to 94%. Sell, strong sell. When a sell or strong sell signal appears, a light red zone is drawn to indicate where to close your short position. The end of the red zone marks the safe exit point, though the price may go lower for additional profit. Buy, strong buy. When a buy or strong buy signal appears, a light green zone is drawn to indicate where to close your long position. The end of the green zone marks the safe exit point, though the price may rise higher for additional profit. Additionally, when the break of structure text appears, the triangle symbol indicates that a structural change has occurred and the price will move in the direction shown by the triangle. Sometimes, if there is a Fibonacci or fixed volume profile support below the triangle's direction, the price may first reach that support before continuing in the triangle's direction. If there is strong volume, no support is needed, and the price moves directly to the triangle's indicated direction. Ichimoku Cloud. The Ichimoku Cloud shows future support and resistance. If the cloud is green and wide, the trend is upward. If the cloud is red and wide, the price may move downward. If the cloud narrows or changes color, the trend is likely to reverse soon. In this predictive indicator, the area inside the cloud is considered neutral. Typically, no trades are made inside the cloud. Traders wait for the price to exit the cloud. Tenkan line. The Tenkan line shows the short-term average and momentum for quick trades. Kijun line. The Kijun line shows the medium-term average and momentum for medium-term trades. Trend determination based on price position. Uptrend. If the price moves above the Tenkan and Kijun lines toward the cloud and breaks through the cloud's resistance, a strong upward trend is confirmed. Downtrend. If the price moves below the Tenkan and Kijun lines toward the cloud and falls below the cloud without resistance, a strong downtrend is confirmed. RSI divergences. RSI measures momentum from 0 to 100. Above 70, overbought, sell signal. Below 30, oversold, buy signal. 50, neutral. The indicator scans for RSI divergences and draws dashed lines when price and RSI conflict. The table shows RSI values and the prices where the divergence starts and ends. 1. Positive divergence. If the price makes lower lows while RSI makes higher lows, buyers are gaining strength. If RSI is below 30, confirm with the support zones on the indicator and take a long position. A red dashed line indicates divergence, showing that price has moved disproportionately to volume and is likely to rise. A green dashed line indicates divergence, showing that price has moved disproportionately to volume and is likely to fall. Thank you for watching the video. Instructions for purchasing the indicator are provided in the description below. If you like and comment on the video, I would greatly appreciate it. All proceeds from this indicator are donated to support African and Palestinian children through the United Nations.